Hey everybody, I'm Matt with Option Omega. Thanks for checking out the video. Hope the new year is treating you well. We're going to look at a back test that is a little bit different today. Title of this video is 7 years, a DTE. And we're going to look at a back test over the last 7 years in SPX. Now, I'm not going to do the YouTube thing and hype it up. If you want to jump just to the back test, you can hit the jump below. It's marked. If you want to hear about the setup and why I picked it and what I was thinking about, keep watching. So there were a few things that happened that kind of sent me down this road. The first thing is, last year I was watching a talk from Mark Anderson and his channel, 0DT Mark. I will drop a link below. Mark's a friend of OO. And one thing that he talked about that really stuck with me was making your back tests less curve fitted, making them more robust. And at Option Omega, our impetus is that you can build high confidence back tests, and making back tests more robust goes right into high confidence, right? We want them to be less curve fitted, more sample size, so you can really look at, obviously it's a back test. Nobody knows what's going to happen in the future, but you can have more confidence trading the back tests if you have better back tests. That's common sense. And so how that relates to this is I started looking at Thursday expiries for 0DTE, right? The problem with Thursday expiries is that we've only had them since May of 2022, so not even 3 years. And this backtest came about, I started playing with Thursday expiries, long debit trades. So different than a lot of DTE that a lot of people do. I started looking at backtests that were taking these trades on different DTE. So, and I ended up at 8 DTE. So the cool thing about doing an 8 DTE trade is if we look at a Thursday trade, that's 8 DTE, that's going to be a Friday expiration. It's going to be not the next day, but a week after that, right? The following Friday. And so the cool thing is we've got a lot of data on Friday options expiration. We're able to run a back test for a much longer time period than a little under 3 years, right? As we would with 0DTE. The other thing that kind of fed into this is, the US election happened. There was a huge move in the market. And then we immediately ran into the holiday seasons. And a lot of traders in our circle had a really rough go of it for the several weeks leading up to the election. The VIX acted in some unique ways with the options pricing. Through the election, the huge move that followed, the market sort of digesting that move. And then the holidays. So the holidays do a bunch of things. They eliminate a lot of the trade setups that people would normally take. They don't take during the holidays. Those DTE don't exist. We're still kind of in that. We just had a national day of mourning for President Jimmy Carter in the US. So the options market, even though there was a chain that day, didn't trade that day. And we have another holiday coming up. So all that being said, this was a good jumping off point to check out this backtest, which again has a good number of trades in it because it's for a long period of time. So jump in, let's check it out. Okay, without further ado, here is the start of the backtest. And the first thing I look at is what? No, this is not something I'd be super interested in for long-term without a few tweaks. Here's why. It's got a 20% portfolio allocation with a 90% drawdown, over a 90% drawdown. Now, like I say, whenever somebody brings up looking at these metrics, context is super important. So the other thing to know is I'm not going to allocate 20% of a single trade in a portfolio, especially a trade that can go to zero. This is a 1.5% wide RIC. RIC, by the way, reverse iron condor, RIC, RIC. This trade can go to zero. So if you hit a couple zeros in a row, if you get in a market that chops for a couple months, you could have a huge drawdown. And I'm guessing that's probably what happened. But we're going to take a look and we're going to make a couple changes. And one of them, again, not to do the YouTube thing where I don't tell you what they are, we're going to look at the VIX. Okay. Now, before we get into that, let's just look at how simple this setup is. And I have not played around with the entry time. We can play around with the entry time. I have a couple other changes to make first. We'll do that later. But basically what you're doing is every Thursday, you're buying the DTE, okay? You're buying a RIC. So you're buying a call and a put that are 0.75% out of the money, and you're selling a short that's 1.5%. You're buying a strangle, selling a short strangle. It's a rick. That's all it is. And the width of it is going to depend what kind of environment you're in. So if we look at some of these trades at the end of 2024, they were 45 wide. And so we hit a full profit here. We hit a full profit here. Bad day. This died in the middle of the tent here. This died almost in the middle of the tent here. Full profit, full profit. You can see if you jump back in time, look, the first 4 trades went on. You would have felt great. You would have had big winners. It was only 20 wide. So again, SPX in 2018, totally different market than it is now. SPX, less than half of what it is right now. As I stand the middle of January 2025, SPX looks like it's climbing back towards 6,000. So twice what it was back in 2018. The first thing we're going to do is let's just look at it on a year by year basis. When you look at the linear graph, this is not particularly helpful. Again, it's an ADT backtest over 7 years. 1, 2, 3, 4, 5, 6, 7 years. So we're going to look at it in log. Gives you a little bit of an idea, and you can kind of see that 2020 is actually, shockingly, you're profitable 6 out of 7 years. So graph doesn't look great. And this is kind of some RNG, right? In 2018, it starts out just enormously positive, and you essentially 4x your money within 3 months. Okay. So that's quite a start. And then look what happens. You get a full Mount Fuji here. You come back down 2 months after being at your all-time high. You would have been down there. You would have gone from 400K to 89K. So this is one of the reasons. The reason I'm going through this numbers is simply to show this principle. When you have a bigger portfolio allocation than you trade at, it can sometimes be useful for understanding numbers like this. When you see a huge drawdown on the screen, what does that actually mean? Well, you can look at it here. Here's another one. You're over $1 million, April 30th, 2020. Like, you've gone through COVID. If you would have kept trading the strategy, and I don't know a lot of people who would have, because again, you have this drawdown from $407,000 all the way down to 83. You think you've recovered. You have recovered. Again, a drawdown down to 65. Another little Fuji here up to 105, back down to 70. So extremely, extremely choppy and not totally unprecedented. What's interesting is that since dailies, which were right here, right around here, May 2022, it's done very well. But what we're going to do, let's look at a VIX. So the first thing we're going to do is we're going to we had some pretty low VIX time. So let's put a min VIX on this. And we can play around with a couple things. But we're going to go to entry conditions and let's put a min VIX on this. So we're going to do a min VIX of 14 and see how that does. Okay. That's a common VIX that people use. I've seen people use it for 0-day RICs. Again, I'm not trying to overthink this. And let me say this. I guarantee you there are better ATT RICs than this thing. I made it in about 30 minutes. Like I said, I just started fooling around with 0 DTE RICs on Thursday, adding DTE to them till I found something interesting. And I know that Fridays are a good day for a lot of the back tests I do. And so instead of doing a 1 DTE RIC, I thought it would be interesting to do an 8 DTE RIC. It gives us more years of data instead of going back to May of 2022, as you heard me say. So it's now the one downside, obviously, when you're crunching this much more data, it does take a little long for the backtester to run. We still have that insane drawdown, right? What's interesting is that it killed that winner in early 2018. So you still have a drawdown. Ironically, you probably wouldn't feel as bad if you kept trading it because it gets cut in half instead of, cut a lot harder, but you still have some crazy drawdowns. After COVID, you're over 500K, you crawl all the way back down. I'm guessing this is probably the drawdown here. This is 90%, 1/10 of what it was. Most people I know would not trade that. But with an 8 DT RIC, a VIX range might be interesting. So what we're going to also do is the downside to a RIC that's put on just completely blindly is you're price insensitive. So we're going to put on a max VIX, and there's a couple ways to do this. You could use a max premium, but I'd rather use a max VIX. And there are multiple ways to kind of put pricing sensitivity around this. Using the VIX is one of them. Now, VIX is not an 8 DTE measure. There's a 9-day VIX, that might be interesting to look at, but we're just going to keep it simple. VIX is, usually looked at as a 30-day measure. And so it still can be useful though. So we're going to try this range 14 to 20 and see what this does. A couple things. So this is kind of what I thought would happen. It smooths things out. It does clip your drawdown a little bit. You still, again, I don't know a lot of people who believe in strategies enough to trade them through a 70% drawdown. Look at this. And I'm in log here. I'm in the logarithmic view. If you look at linear view, it looks like this. Again, not really that helpful. Let's look at log. You're up to 278K 2 years after doing it. We're going to play around with this allocation too. Okay, so all these numbers are contingent on what we're starting with and how much we're allocating. So, not one time have I even looked at nor mentioned the starting capital or ending capital. I'm really not even concerned with those right now, to be honest, because what I'm trying to think about is, would you continue trading these strategies that had this crazy drawdown? And we can see when that drawdown was. It was in 2021 right here, 72.7%. But you've had brutal drawdowns every year. A 55% drawdown the first year, 44. What's interesting is that, the last couple years since dailies, and there's a lot, there's hours and hours of YouTube ink, digital ink has been spent on the effective dailies on the option market. So I'm not going to get into that, but let's do this. Let's try to play with this and see. And by the way, I haven't even talked about this. I'm just using 10 cents entry slippage. You're not closing this at all. It settles where it settles. I'm using 63 cents for opening and closing, which there are brokers that have that. That's cheaper than a lot of people pay. I get that. We can change that. Although, if you're really worried about fees and commissions on a $2,500 trade that you trade once a week for 8 DTE that you don't close, that's probably not going to move the needle for you. By the end of it, we're trading enough to get really good commissions. 1,200 contracts. That is crazy. So let's do this. Let's try this. If the max loser is 2,500, let's try doing this at like a 3% allocation, which would start off with you trading. It would start off with you trading more than one, because I'm sure it was cheaper back in 2018, right? Because the market, again, half what it is now. But that's one of the nice things about Option Omega. These percentage strikes, they have pluses and minuses, but using percentage to select the strikes in your back test can be useful over a multi-year back test like this. So again, we're looking at 8 DT over 7 years. So this is probably a little more reasonable. And what we have is 7 years of positive return. And the only thing we care about is a VIX rails. So whenever the market is too crazy, above 20, or too dead, below 14 with just no movement, you're not putting this on. So you're expecting some movement. You're kind of in a normal-ish market for options. Again, that can be defined a million different ways. I'm just saying 14 to 20 range. The C's aren't totally flat. You're also not in completely choppy waters. So let's, what we could do? We could actually, so we'll go against the title of the video. We could run this a couple years earlier. I'm interested to see, can you keep a 7-year win streak alive? We're going to add 2 more years to it because we're doing Friday expirations. It'll have a few more. And let's see what this does. Would you trade something with a MAR of 1.2 on a 3% allocation? Most people probably no. It's got a 68% win percentage. That's not bad. Here's what's interesting. Your averages are pretty close. and your max winner has a much bigger potential than your max loser. So a lot of people might look at the MAR and go, again, MAR is a function of these other things. Okay, here we go. So it picked up a few more trades, because here's one of the things that's a negative about what we did. So this is just a straight up negative, is we have a smaller sample size. So 163 trades, is that enough for you over 9 years, 16, 17, 18, 19, 20, 21, 22, 23, 24. Those are all years, and you're only trading it 163 times. I don't know. Something else too, it's probably picking up. The reason the average days in trade is higher than 8 is there are probably some holidays and stuff in here. I mean, we can turn exact DTE on and rerun it. It's got 163 trades now. But this is the kind of trade where you may leave exact DTE off. You know, a lot of people aren't super worried about a holiday for a trade like this. They might be, maybe they should be, but probably not going to affect our trade too much. But there are a lot of times when holidays fall on a Thursday or Friday, if you think about it. So that's why it's pushing the exact DTE at. Actually, because it would be falling on a Friday. So there's a lot of Friday expirations. So we'll run it again. But now we're up to 8 DTE for 9 years. Maybe I should have made that the title. So it does take a couple of the trades off, and your average days in trade are back down. We can click on the recent test runs and bring that bad boy back up. So yeah, kind of interesting. If you are really upset and concerned about fees and commissions, we can do like more expensive fees and commissions. This, no problem. Just takes a few seconds. But what I'm focused on is you win 69% of the time. Nice. Your winners are close-ish to the same as your losers on average. And again, your winners here are because we're doing a 9-year back test here, you are going to have a pretty big range in what the test actually looked like as far as what the dollars were, because we're in a totally different market than we were 2016. That being said, your winners are bigger than your losers. Your max winner bigger than your max loser. There you go. Here you go. So this gives you an example with the higher fees and commissions. Use exact DTE, higher fees and commissions. Here's a few different choices. They're all, you know, they're all roughly the same. Here's the lower fees with exact DTE turned off, so you have a few more trades. Here is the version with use exact DTE off and higher commissions. So we will just save this one. Capture rate, 28%. Interesting. But again, here's your drawdown, same year, 2021. You can see how much the impact of taking it down to 3% had. And by the end of it, if you look at it, you're only trading 3 contracts, right? This is one backtest. Again, this is a backtest you could add into a backtest portfolio and play around with. Like I said, this is a pretty dumb backtest in terms of the puts and the calls are identical. Is there a way to make one of them better by skewing them? Probably. Is there a way to make one of them better by ratioing them? Possibly. Is there a better avenue than a VIX range for putting them on? Possibly. Why don't you play around with your OO sub and find out? As always, if you are trying to trade options and you don't have a community, you are depriving yourself of one of the most important tools for option trading, a good community. Option Omega, verified channels on our Discord are for backtest subscribers. Jump on, get yourself a community, and chop up these ricks with us. I'm going to save this one, 8 DTE 7 years, and I will post it in the link. As always, like and subscribe. It helps us with the videos. Thank you so much.